So, officially welcome everyone to our project webinar tonight. Delighted you could join us, delighted with our guest tonight on this special project, the West Buildings project. And it doesn't actually seem that long since we did our last project webinar. These are coming around very quickly on the back of each other. Exciting times for our property crowdfunding platform as we're launching deal after deal. And it's certainly great to be on another one tonight. So for those that don't actually know me, my name is David Johnson. I am the Chief Executive Officer here at LEOcrowdfunding. We are a property crowdfunding platform. I am an approved person in terms of FCA status, so you can see my number there, so you can check me out there. And we run a property crowdfunding platform. And you can see along the bottom there, we always like to mention at the start, just so it's really clear as to the regulatory and compliance angle that we must adhere to on these type of webinars. So Leo Crowdfunding is an appointed representative of Share Unlimited, which is authorised and regulated by the Financial Conduct Authority. And so that's sort of the caveat. Capital is at risk when you invest in this type of property investment, and you'll see various disclaimers and pointers as we go through the presentation, just reminding you to obviously read the documents, look at the risk, and make your own decision if this is an investment that suits you. So the project tonight, this is 35 West Buildings in Worthing, and you can see the headlines there on the left-hand side. It's an HMO mixed-use conversion. Now the target raise is 142,538. That's the maximum target. However, the minimum target has been set by Target 5 at 100,000. So as long as they reach 100,000, then they can close the raise, draw down, and get on with this project. The projected return on this project is 13.44% MIRR, or Modified Internal Rate of Return. We'll discuss that later on in the presentation as to why that is the metric of choice. It's a 6-year project, and the minimum investment is £100 on this project. So, Target 5 are the developers, and I'm absolutely delighted that they're able to join us tonight for this project webinar. So if Tina and Andy can unveil themselves and unmute themselves, that would be fantastic. Hello guys, how are you? Okay, good. So what part of the world are you in tonight? Are you down normal places or traveling, or where are you?
I'm at home tonight, so yeah, just sitting at home, just had dinner, so all good.
I'm in a hotel room in somewhere in central London. I'm on a 2-day course, so yeah, I'm in a sort of fairly nondescript business type hotel. So
very good, very good. As long as the broadband's good, we're okay, which is excellent. So your company obviously is Target 5. You're both very experienced in property. I'm going to let each of you take 35, 40 seconds just to explain your background, your credibility, what you've done in property. So Tina, would you go first for us, please?
Yeah. Hi guys, I'm Tina. I have had about 20 years property experience in the Sussex area. More traditionally, my background is in estate agency, land developments, working with big PLC developers, and then more recently, sort of acting as the head of the Brighton Hove Estate Agents Association, and coming up for 2 or 3 years ago now, Andy and I became business partners in Target 5.
Hi, I'm Andy. Yeah, I've been in property I've been a landlord since 2001, 2002. It says there I'm an ex-army officer, worked in commercial defence, and then founded Target 5 8 or so years ago. But I've been a landlord for quite a bit longer. We've completed through Target 5 for myself and other people around 350, actually getting up towards 400 projects now, a reasonable portfolio. And doing a lot of these type of projects, so high yield, centrally located, commercial conversion, permitted development, HMO, intensification type projects for a long time. So yeah.
Excellent. Yeah, no. So when I saw your CVs a few months ago, when we obviously first connected, certainly impressed, Tina, particularly with the amount of transactions you've been involved in, and you're very high profile around in Brighton area, which is very positive. And when I saw Andy's, your background in the British Army jumped out, Andy, because as you know, some of the attendees of the webinar will know, I was also a reserve British Army officer, so we shared some similar experiences in the past in Sandhurst and Iraq and some places like that. But one quick question on that, actually, have you brought some skills that maybe you had developed in the Army, particularly the role you had? Have you found that's helped you in your property investment journey?
Yeah, certainly. I mean, being able to deal and to manage people, to understand when someone's trying to bluff you and when they're not, and to be able to sort of, look them in the eye and do a deal. And really, I guess a little bit really that sort of helps is just that sort of understanding risk, understanding the situation, and being able to sort of remain relatively calm when other people aren't.
Yeah, excellent. No, very, very good, very good. Okay, so let's get into the actual details of the project. And of course, this is like an introduction tonight. For those who are interested in looking at this in more detail, you register on the platform, you download the full offer document, where Andy and Tina have supplied a fabulous document with loads of annexes giving you all the information about the project. So obviously in a short webinar, it's not possible to deep dive into every aspect. So this is the broad brush, if you like. So first of all, Tina, where exactly is the project, the region, what do you know about it? Take it away.
So it's in Worthing, which is just west of Brighton and Hove, for those that don't know, which is right on the south coast. It's an area that Andy and I know really, really well. It's where all of our kind of core projects are based. You can see the beach from the actual from the property, so it was one of the main reasons for the choosing it, really, because it really does meet with sort of the need for the area for professional sharers. So yeah, right on the south coast, so really prime location.
Yeah, and it's an area that you guys are experienced in, so you've done projects in this area.
Yeah, we've got we have some rented out nearby. We've got projects which we've done for clients in the area that we manage through our letting agent. We also have others which we're in the process of offering on and buying in the immediate area as well. So there's lots of activity in that area, and specifically chosen that area because it's an area of regeneration from the local authority as well. So it's got some investment going into the area, which means that it can only help with the capital appreciation of any property investment in that area. So
that area just west of the pier, which is where it is, you basically got the promenade, and then behind it you got the street that runs parallel, which is Montague Street, turns into Rowlands Road, and then West Buildings is just off there. So we've done a number of developments on Rowlands Road, and parallel streets are there, Montague Street as well. It's just a really, really good location. It's starting to move towards the nicer, nice and residential areas, but it's really, really close proximity to the town centre, the beach and everything. And this property is literally 20 yards from the pedestrianised area as well, so it's well located.
And the hospital and the train station as well are both right there. So it's got everything you'd look for to kind of in your tick box of what makes a good property to look at. It really did have a lot of those. So it was definitely one we wanted to secure. Excellent.
Okay. And I think you mentioned earlier that this is an area of the town that the local authority are actually earmarking for some investment. So can you just elaborate on that just slightly? Yeah, so
Worthing Council are investing in that particular area. As Andy mentioned, it's just around the corner from Montague Street, which leads onto the main shopping area in Worthing. This is sort of a secondary location in comparison to that, but as part of an extension to that, the council are going to be investing in helping shops to open there, and obviously making that a bit more of a hive of activity.
Something happened on Tina, your side. Yeah, I think it's back now. Okay, so Andy, let's deep dive into. Not sure if that's feedback from from somebody. Yeah, I think we're okay again now. So Andy, let's deep dive into some of the numbers, because at the end of the day, property investment is all about the numbers. Location is important, but ultimately, obviously, it's going to be the numbers stack up to investors. So you want to just talk us through sort of the high level. I suppose you start with how you sourced the project and what value you reckon you're buying at versus open market value is probably a good place to start.
Okay. So the property came to us, essentially was never marketed, so sort of pre-market, off-market, but via a local agent known to us. So we deal with a lot of stuff purely off-market and a lot of stuff pre-market with agents we know. This is a mixed-use commercial property. They were looking for 300,000. We then were able to negotiate the price down, I think, to 260, and then we further negotiated down to 245. So it already creates, it's already very, very good value. What makes it especially good value, and what we look for in value isn't just about the price, how it looks. It's it needs, we look at the comparison to other properties on a square foot basis. So what makes this different to other, because there's there's quite a few shops with uppers that have come available on, in and around that area, but it's all about the space above and behind. So as you can see from the picture, I mean, it's not the prettiest building at the moment. It will look absolutely fantastic, as Tina will share, but what it's got is it's really high and it's really deep. And therefore it's got a really, really decent square footage. I'm not entirely sure, but it must be sort of about 1,600 square feet plus the commercial. So it's a really, really good size. So if you look at that on a square foot basis, buying at 245,000, it's a cracking deal, and it makes it really versatile to be able to develop the upper parts.
Okay, so sorry, go ahead.
Yeah, sorry. So obviously they've got acquisition cost there, which is the usual stamp legals. And then the renovation cost, which we've gone through. So we have a dedicated project manager, and we literally go into a huge amount of detail. I think Tina's going to expand slightly on that renovation, and then that totals out at 407, and then we expect to achieve 550 on a revaluation, which will be based upon the 2 units above plus the commercial unit combined. With that.
Yeah, no, that's grand. So you've got a total cost of 407,250, expected valuation from the work's done 550,000. So somewhere in the region of 142k potential equity created in the deal through the project.
Yeah, that's it. And it might well be that we achieve a higher valuation, but that's what we've based upon the stuff that we've done. And we have done a lot in the area. As well as sort of that combined with market research and talking to the agents right up until very recently when we submitted the raise in, that's what we think we'll get.
Yeah, okay, no problem. So the bank funding is in place now. We don't mention the actual lender on these webinars. Obviously the information is commercially sensitive, so whenever someone registers, then they can download the full offer document, and the full letter and lending terms are supplied. But it's safe to say it's a well-known lender, and
we go with very, very conservative, well-established high streets.
Yeah. So
it's well known to us. So we've got a very close relationship with the
okay. So. Yeah, no, that's fine. People will be rushing now to register and download the document to find out who it is, which is what we want. So in terms of the high-end figures here for the attendees, the webinar, the investor funding portion is 142,538. So that's the amount you're looking to raise on the platform. And what's that earmarked to be used for primarily?
I mean, that's essentially, as you can see from the figures, that's essentially going to pay for the build. really. Obviously, with, you know, it doesn't work out exactly like that because of other costing is just short of the build amount, but so that, you know, roughly speaking, that's how it will end up working.
Okay, brilliant. Okay, so we will come back to some questions, I think, at the Q&A. So there are some questions coming in, but we'll get to the Q&A, I think, and then we can put them all at once. Because we're just talking about the actual renovation costs. I think what's really important in that is primarily what the funding is for. Then I think it's important we deep dive a little bit into exactly the work that's planned to be done. So Tina, I'll let you, I know I saw a video of you recently there, actually walking through each of the rooms. We hope to have that video on our pitch pages tomorrow, actually, so people can actually see that video. But I know it's like a 10-minute video of you doing a detailed walkthrough. So just in terms of summary, just talk us through the costs.
And just to point out quickly, I've just noticed that this is slightly incorrect actually. There will be 2 units above the ground floor commercial unit rather than just 1. So we will have a total of 5/6 bedrooms that will be lettable, shareable rooms, professional share or lettable rooms. But as Andy alluded to, we have a dedicated in-house project manager, Tim, who's really experienced. And as part of the process of doing this, we look into in great detail all aspects of the refurbishment and development, services, access points, all the way down to the door and bedroom furniture, and everything in between. So there's a lot that goes into it. In this particular instance, it is in a conservation area, so we have to be quite mindful of things like window refurbishments, making sure that they are done to the correct standard, but still in keeping with the area, and working very closely with council. And one of our main sort of company ethics is that we do work closely with local authorities and make sure we are meeting all of their requirements, and working with them to create, you know, the right space, fully licensed, etc. In this particular instance, we are going to be putting in obviously kitchens and bathrooms because it just is a complete rip out in this particular instance. And then the shop on the ground floor will be a little bit more of a lighter refurb to bring that up to modern standards. But what we find with commercial spaces is that people do like to go in and put their own stamp on it. So we make it watertight, sound, clean and modern, with people then, whoever the tenant ends up being able to put their own sort of branding and furniture and things like that in. Yeah.
Is there a tenant lined up, did you say, or is that still you letting the market decide who moves in?
At the moment, we find that the best way to get the best rental is to make sure we've got something to show them that's appropriate to get those figures, those real maximum figures. And whilst, you know, if you're in or like property, you often can have that vision. A lot of people maybe can't. So we like to have certainly almost finished spaces for showing people, for potential tenants, and that goes for the professional sharers we're going to be hopefully getting in upstairs, as well as the commercial unit.
Okay.
Yeah.
Some of the mood boards then that you've done. So just a little bit about your philosophy or your design concept. What is there? I'm assuming there's thought behind that, and it's a little bit unique. So what's the process?
So we want to create spaces that essentially we would want to live in. We have a company ethos that if we want to live in it, then so will other people. And you know, gone are the days of creating spaces, you know, build them small, stack them high kind of thing is not the way we work anymore. So we want to create fun, funky, stylish spaces that people can be proud of, and also to create a longevity of tenant as well. We find that by doing that, people tend to stay much longer in the properties. I think the average time that a professional sharer stays in a room rental is 18 months at the moment in the local area. So we would look to make that longer. Well, that's always we're always trying to push the envelope with that. And we do all of our design in-house. So we have in the past taken advice about interior design and things like that, but we have some really good people within our teams, and including within our lettings team, who really are on the ground and hearing what people want out of the properties. So we just really look to draw feedback from that, from past developments. And if anybody wants to have a look on our website, there's some really good examples of some recent developments which have kind of pushed the styling of professional sharing that little bit further. And we really did sort of break records with renting those spaces quickly for good rental, and also on the revaluation figures for the local areas. I think somebody once told us it wouldn't be achievable, the figures we achieved in some of the ones we've done recently, but we have. So we want to make sure, and we want to make sure that we create spaces that are nice to live in, and that's everything from light fittings, cushions, sofas, and really sort of providing a full package for people to move into.
Yeah, that's a really important point there, is that it is about the aesthetic, and the aesthetic certainly helps to rent the properties. It helps with refinance valuations, but we also really listen to our residents. We call tenants residents. We listen to them. It's a lot of it. There's a lot of thought that goes into the design around the practicality of it. Yeah. So making sure that the rooms are really functional. So that means internet, it means USB points, it means all of the, that there's intelligent storage, especially where space is limited. So there's a lot about that, and we really sort of take their feedback and incorporate that into the design. So 50% of it is the aesthetic, but the other 50% is just the things that you don't immediately see, but it's just about making it more of a pleasant experience for people to live in.
And that it lasts as well. The other thing, that we had some feedback from other maintenance sort of side of our business, is that it's all very well and good having this beautiful property, but if you're going back and forth with people repairing things every 5 minutes, it's not actually it's not giving value either to the tenants or to our clients or to ourselves if we're doing the development. So it's got to have durability as well.
Yeah, I think that's a really interesting point you've made there at the end, Tina, and I want to pick up on what you sort of commented on a few minutes ago. I think one thing that really impressed me about you guys as fundraisers was, clearly you've got a track record as developers, but because you also have an involvement in other companies, collectively you have the resources, you have the skill set, you have the team that it's not just development. You can do the design, you're involved in the renovation, etc. So you've got a number of companies you've like that interlock, and that, on the one hand, the offer doc will obviously mention that there's a conflict of interest disclosure that needs to be made there, because there are a number of companies involved, if you like, in the project. But on the plus side, the experience you guys have and the team you have and the skills, I think is very impressive.
Thanks.
On that front. Okay, so now let's dive into the numbers. And I know Andy was really looking forward to getting into the returns on this investment potentially, and the model that we've chosen. So this is something that within Leo Crowdfunding we have been discussing for a number of weeks actually on our webinar. We do a joint webinar with John Corey and his Property Fortress brand, and we have been discussing this concept of MIRR, Modified Internal Rate of Return. Now, I'll let you, Andy, just talk through sort of the headlines. Again, Q&A, please put your questions in there. We're going to be moving to Q&A quite quickly. We're in a really good time tonight, so we're going to hopefully allow for a good discussion where you can ask Tina and Andy in-depth questions, and they'll have a bit of time to answer. So if you have any questions on this, get it in the Q&A, and we'll do our best to get to it. So Andy, high level, your numbers guy, what sort of the projected investment return on this project?
Yeah, no problem. Yeah, so when we put together this whole model for the investment and the development, it was really important to us that we found a way of creating an investment that sort of almost reflected the way the development's going to work. I.e., we buy something, we do the work, we then refinance, money comes out, and then there's ongoing income. And therefore, when we built the built this model, this is sort of what we tried to reflect. And then the best way for this to be sort of communicated and demonstrated was by, this sort of MIRR type projection. So broadly speaking, what we then did, because it isn't, some of the numbers can be slightly confusing, is we then used a model based upon what it would look like if you put in the £100 or £100, which is the sort of minimum investment, but what £100 would look like. So broadly speaking, we've said what we're looking to raise, £142,000. We've gone through those figures. So the money comes in. Hopefully, we then go through the raise. We successfully raise the amount we're looking to raise, and we'll go through and develop the property. Now we will then refinance the property. We put it in for these figures freeze at the end of year one. It might well be sooner. It's reasonably likely to be sooner, but we've done it for this projection at the end of year one. And based upon the figures that we've got at the moment, based upon the costs that we know, then it's estimated that of the £100, £72.71 will then go back, on a year or within a year, go back to the investor. Then what we're then going to do is then there's a profit share essentially on the rental return, which then means that then the investor then will get a further £3.96. It's shown here for £100 each year, going through to the end of the period, shown in year 6, where we will essentially sort of buy the shares out, either sort of refinance or sell or whatever. We'll essentially then redeem the shares, and that final figure represents that final year of rental income, plus essentially the remainder of the initial investment, then plus any capital appreciation over and above the refinance amount during that time, 50% of that. So, and we've sort of taken a reasonably conservative estimation of 10% in that time, and that's where that figure comes from. It's possible it could be higher, but that's really. And then the idea was to sort of to demonstrate that in this sort of simple flow chart. But broadly speaking, 70% or so out after a year, then income each year, and then another sort of large payment at the end.
Okay, that was very well explained. Well done. I think that's a clear walkthrough the deployment of capital. I think the key point that you've made very well is that at the end of year one, all things being equal, of course, there's always a degree of risk, but all things being equal, then at the end of year one, it's like 70% of the invested money is returned to the investor. And from my point of view as a platform owner, I think this is a really interesting model because the person who's investing the funds, while it's a 6-year project, and they're receiving the value of the shares they buy over the 6 years, they actually receive 70% of their funds back potentially at the end of year one to go and invest somewhere else or do something else with it. I think it's a really interesting model, and the MIRR allows for that calculation that's over time. This is not an ROI where it's in 12 months out. This is cash deployed over 6 years, but cash returned during the 6 years. And therefore the MIR calculation is absolutely the right calculation to use. So that's why that's used. The offer document goes into this in more detail, explains the terminology and the reasons behind the model. But for the purpose of the webinar tonight, I think that clearly shows investment in, 70% back, 50% profit share of the rent. At the end of year 6, there's not only the rent that year split, it's then the buyback of the share and with any capital growth involved. So that really sums it up. So no doubt there's been a few questions pop in, so we'll be circling back, no doubt, on this very quickly. So we'll dive into Q&A just in a second. Let me just point out to those who are on the webinar, if this is a project that you're interested in, then of course we're going to take you through the registration process to get the document. However, before that, you can actually go on our platform, and even without registering, you can leave an email address. And if there's an amount that you feel you might be interested to invest, if everything checks out, then you can leave that amount there. and that just good feedback to Tina and to Andy, just regarding the level of interest there is in the project. And I was speaking to Tina today around through some of the recorded interests that are there already on the platform, but that gives you a chance to, if you like, just record your interest. This is something that you are interested in. So the project, guys, is due to go live at 12 o'clock this Thursday. So I'm sure you're getting all ready for that and getting excited for the big launch.
Yep. Yeah, I mean, it's been sort of a long, feels like a long time coming. So yeah, it's exciting to see how it works, how it goes. But yeah.
Yeah, this is obviously your first time, we should say, your first time doing property crowdfunding. So this is, the whole process is completely new, due diligence, and you know, all the deep diving into your business affairs that we have to do to obviously, if you like, DD projects. So yeah, you've gone through that, and we're about to go live, which is great. So that's Thursday. This Thursday coming, 12 noon, we go live for investment. So let's get into the Q&A. We've got allowed a few minutes for this, so actually a number of questions. So we'll try and run down them. We'll try and answer them reasonably quick, guys, if you can, because we can always circle back. And all the questions that are here tonight, we're going to upload onto our forum tomorrow. So by tomorrow morning, these will all be on the forum, and Tina and Andy can answer in way more detail tomorrow on the forum. So we don't want to spend too long on one question and not get to the rest. So let's try and dive through these. So has the loan offer for the refinance post works been credit approved?
So when we got the initial, so the way that the lender works, that we're working to, the lender that can't be named unless you register, they have already assessed the value on the way out, and they are potentially one of the exits. So, you know, but we will look at the most cost-effective and profitable exits at the point of exit. So they will then have to revalue the property, which is, you know, one of the key things is that we've gone for a relatively conservative end valuation, so that we're not taking, you know, we're not trying to push the envelope too far. So we're going with valuations that we've experienced ourselves. We're going with the valuations, the end valuations given to us by the initial lender and local agents. But then what we're going to do is then improve on the quality that they would have based that valuation on.
Okay, that's no problem. Yeah, we can add some more on the forum answer to that if we need to get into the what process or what time it would be credit approved. So another question here: what is the split between residential and commercial value on the 550k GDV? You know that offhand?
I can't remember now. What did we say? We said 70. Did we say 70?
Well, for the commercial, I would have to check. I'd have to check. I can't remember exactly. It's probably it's about 100, 125 grand, something like that for the commercial, and then a split above. So the 450 might be 275 and whatever it is. Yeah, I can't remember exactly.
Okay, no, so you can get the exact figures and fire it on the forum, but that gives a rough. So around 125 for the commercial is your estimate from memory.
Might have been slightly lower than that. Again, we went slightly conservative on it.
Yeah.
Okay, that's fine. Do you have recent comparables for the rentals, and has COVID had an impact on demands for individual roomlets?
Shall I take this, Andy?
Yeah, take it.
There's probably not a short answer. But yes, COVID has had an impact. But actually, the way that we've designed the properties, which is to have individual ensuite bathrooms, and to make sure that there's plenty of circulation space in the communal spaces. And we've specifically thought about that because that was one of the feedbacks that we got about the designs of properties to become more COVID safe, which is this phrase that's been coined. And yes, we do have comparable evidence. We do market research for every project that we do at different stages throughout the project. So we do it at the beginning before we offer, we check it as we go along, we check it again, and then we'll check it again before we launch for any marketing. And we purposely are conservative with those rental rates to allow for any potential fluctuations.
Yeah, I know you guys have like a T5 criteria form that you fill out on each property, and that you actually have thankfully made that available to the investors. So those who have registered can actually download your T5 criteria, which is the analysis you went through before deciding to go with this project. So that may help answer some of that. Okay, what occupiers do you expect for the commercial units? Have you any idea of who may be the prime movers for that?
With obviously the change in the use classes and the way that it can be interchanged now, we can be quite broad with who that is, thankfully. The market area suggests sort of a retail shop type tenant.
And in the street, one of the benefits of this road is it's really, really close to the main pedestrianised area. So whilst it doesn't have the same level of footfall, it's still a really, really busy area, and that's one of the reasons it's been identified for sort of strategic development, because they are going to lose some retail areas inevitably, and this one is very much going to be retained. The benefit is that it's got a lower rateable value, and therefore we don't have to, and also we won't be charging the sort of rents that they have to pay on Montague Street. On the sort of the ones parallel and around, it's been a real range. It's going to be appropriate for as Tina said, sort of smaller retail units, but it's also appropriate for offices. There's a couple of architecture practices down the road already. There's an IT consultancy as well, so it could really easily then sort of end up being something slightly different. And the new versatility of use class means that we're really sort of, it makes it slightly easier for us to then rent it.
Okay, so that's nearly halfway. We've answered 7 and there's 7 more questions open here, so I think this will have to be the speed round. So we're moving to the speed round now, where we get sort of quick, brief answers, but again, we can follow up then with the forum tomorrow. So there's 2 kind of a little bit similar, so I'll combine them. Could you please explain why Target 5 will not be putting in any equity other than a nominal £812? And someone else has said, why are the numbers so precise? There's 538 and 812. So they're sort of very sort of similar. So why have you went with this kind of model without you guys having to put too much equity in?
Well, I mean, the first thing is we do put. So there's the whole process is, and I don't want to sort of the whole process is actually relatively, certainly to get the first one off the ground, it's actually relatively expensive for the business, quite aside from all of the legal stuff, shareholders agreements, all the sort of things that go into it. Is, there are lots of other costs that we haven't shared. The other thing that is clearly that we put in a huge amount of expertise and create a huge amount of equity immediately. So it really just brings it on a par with other sort of investor type models. In terms of the figures, we've been guided to be as precise as possible, insofar as not looking to round things up or down or whatever, just so that we can reflect the information as accurately as possible, as we need to, as part, being FCA and all these sort of things. And therefore it does mean that we are being quite precise, because it is literally taking what we've got on an Excel spreadsheet and putting it into the proposal. So that's that on that. And I think it's maybe fair to say also that this may not be your only raise potentially in crowdfunding. So we certainly hope not. We want to get some sort of economies of scale going.
So it's a case of while if this was a standalone deal, you could have either put your own money in or got other investors, as you've done for other projects. But this is a journey
exactly that. This isn't,
to reach out to a new
yeah,
audience.
this is exactly that. This isn't actually the sort of, you know, for doing something like this isn't necessarily the most cost-effective way for doing this, but we're really, really excited about the idea of doing a number of these, about developing relationships with the people that are investing with us. And to, you know, also when people learn to recycle their money, to then to sort of, you know, as well as a number of other options to be available on the platform, to be able for them to then, you know, potentially work with us in the future. So that's, you know, we certainly wouldn't do this for just one deal. The idea is to do it, you know, as we will do with everything, do it really, really well, and then develop those relationships and work with people going forward.
And just to add, if we were to only reach the minimum, the project will still go ahead and we will still invest that. Yeah, so we're committed and believe in the project, that it will go ahead regardless. So
yeah, the model, what we put and how we put in all that sort of stuff, like, we are funded, and you know, we do our own developments. Target 5 does its own developments. We are, you know, we are always have the money, you know, this money, whether or not we do the raise, this, you know, obviously we're going to do the raise, and we expect to go beyond the 100,000, but you know, we have exchanged.
Yeah.
So okay, that money is, we wouldn't have exchanged if that money wasn't in the bank.
Yes. So you're not relying on the crowd to bring the money.
No. That's
absolutely fine. Well answered. So again, we're going to have to really go for one sentence answers here. What is the rationale of the 6-year refinance? Just as the
one year to develop 5-year product to give a decent income and an opportunity for capital appreciation post-COVID and Brexit.
Okay, and what if you can't refinance after 6 years? It's a good question.
We've got a number of strategies for exit. We work with a HMO broker. We work with a number of agents. We can sell it.
We would put the money aside if needed to pay redeem the shares. So
okay.
we would have if we weren't going to refinance, we might decide to sell. We might decide to just raise the funds internally. We will be looking at that, and we will have a plan more than 2 years before we have to execute that.
Yeah. Okay. Brilliant. Quick one here on fire safety, but it'll have to be a quick one. Tina, my question is about fire safety. Residential above commercial seems at present a higher risk. HMO have commercial and even higher risk. Has a fire strategy been agreed with local authority? How has fire risk been taken into account? And is it fireproof? Stricter requirements seem to be on the way. So,
yeah, we, again, as I mentioned earlier in the presentation, we specifically have a project manager who works with building regulation companies, private and the local authority, and the architects, to make sure that we are not only adhering to and meeting the current regulations, but looking at how we can future-proof them. We take all of our licensing, planning, all of that very, very seriously, and our reputation is extremely important to us. Not only that, the safety of our residents is extremely important to us. So, yeah, we're very, very aware of what we need to do, and as I say, that's why we employ the specialists to advise us on it, to make sure we're doing it correctly.
The key thing on this, just on fire, is access and egress, basically. So that's where the problem would be, and that's where we've got 2 entrances on the front and 1 on the back. So they'll all have separate entrances.
Yeah.
All of that would be fire insulated, in line with building control. So these things we take really, really seriously. So
yeah, okay. So why do commercial and not have the full building into HMO occupancy? So why keep the ground floor commercial?
Andy?
Because it's a protected retail area, and therefore there's no PD rights, and rightly so, because we should be looking to protect retail areas as they are, which is so we can't convert it, but the good thing is they are investing in it. So yeah, but what we do as well is, the reason that we keep the commercial element at the size that we have is that A, it makes it usable and it makes it a decent retail space. But magically enough, if that were to change in the future, it'll make a perfect one-bedroom flat.
Yeah.
Okay. So that last two, and then we can wrap up. What's happening in the retail? Sorry, what is happening to retail in the area given COVID? I think you did mention that earlier, and the shift away from retail to Amazon. So I think you did cover that earlier. If you wanted just another sentence.
Again, just the regen, clearly the local authority wants that area to remain with retail thriving. And I allude to it again on the video that you mentioned earlier, David, but and it's important for the area. It's important for the residents of the area that there is a diverse retail element within that area. It's what makes it such a nice area. So.
Yeah,
okay.
The likelihood is that because there's going to be a little bit of churn around there, but what you're going to have is the areas, so further along Rowlands Road and Heen Terrace, these are areas just off there, those are the shops that are going to move, that are going to close down, and then they're going to move into the centralised areas, which is what the council want anyway. So that's it. But this is part of that area.
Okay. Yeah. Excellent. So that last question then is one specifically for you, Tina. You mentioned earlier that the project going live was a long time in coming. So the question is a good question. From when you found the property, I suppose we could say when you decided to do a crowdfunding raise, how long has it taken to get to launch?
It was a challenging property to buy, as they tend to always be for us. The good ones are never easy, I say. But I'd say, God, it must be coming up for 7 months total. Obviously, we had the lockdown where a lot kind of stalled. We didn't stop at all on this project. We kept pushing forward. But yeah, I would say it's circa 7 months from when we agreed, and we exchanged it 3 weeks ago. So yeah. It's been
7 months from when you sort of targeted the property.
Crowdfunding loads of things are going into that. So we went and had a look at it. We then got a structural engineer around because we saw that the bay at the front had dropped. So we did all sorts of reports, done subsequent renegotiation. The property was owned by 3 Vietnamese people who then moved back to Vietnam and didn't seem to be talking to each other at all during lockdown. So there were quite a few challenges around getting it to exchange.
Okay. And then from the crowdfunding point of view, I would estimate about 3 months from sort of the discussions of let's do a crowdfunding raise, probably 3 months. That's certainly longer than normal, but as you say, there were some elements in that. And then I know you guys have also, in fact, maybe just Tina just very briefly mentioned your sort of advertising, your awareness. You've actually been helping to build your brand as part of this with even a new website, I believe. Is that right?
We've just launched our new website. We've invested heavily in not only our social media generally to sort of brand awareness reasons, but also we've specifically launched a campaign around this. And we wanted, it was partly by design, the time that it took to get the launch of the View deal for the project, because we wanted to make sure that we could align the website and the campaign around the raise itself. So not all by design, but some by design.
Okay, no, that's brilliant. Okay, guys, so I'm going to just run through a couple of slides here, and then you guys can have a final wrap up in a few seconds. So obviously, as I mentioned earlier, we are a property crowdfunding platform. So those who choose to invest in this West Buildings project do so through a crowdfunding platform. Again, we are an appointed representative of a company called Sharon, who are authorised and regulated by the Financial Conduct Authority. These investment offers actually don't go to the general public. That's why you have to register, and then you can download the information. So literally just in a few minutes, let me take you through the registration process, because I was telling Tina earlier, we've got a number of people who have recorded their interest, but they haven't actually fully become investor ready. So I want to be really clear as to what that process is. On previous raises, we have had people who have started registration, didn't finish, and then when the project went live, it was then taken full before they finished their registration. And it was like, okay, you need to be really clear as to what you have to do. if you want to invest. So when someone logs into the platform, you'll see this register to invest or log in to invest if you're already a member. So at this point, you can't access the documents. You can read a little bit about it, the team, a bit about the overview, but you can't actually access the main information. You have to go on and fully register. So there's the initial registration, so password, basic details, you get a confirmation email, and then on top right-hand side on the account, you'll be able to see your profile, and then you have to go through KYC, so provide a valid ID. You may be asked for proof of address as a backup to that. You then have to go through an investor readiness test. Now, this is a very important part of the process. This is a multiple choice where you answer the right answers to demonstrate that you understand the nature of investing through this type of platform. So this really will ask you a series of questions and just ensure that you understand what you're doing as an investor. You'll also then be asked to designate whether you're a retail restricted investor, sophisticated, or high net worth. And again, that's important when it comes to regulation as to what designation of an investor you are. And once you've completed that process, and we do have some people who do that in less than 10 minutes, then you can actually download the documents. So there's a full offer document, there's the T5 selection criteria. So now you can really deep dive into the documents and really do your DD on the project. If you then decide to invest, then you go in and the minimum investment for this is £100. If someone, for instance, in this example, want to put in £500, then it will explain the amount of shares that financial amount is purchasing. So that will be on this screen. And then you move forward to the payment method. And there are two choices of payment. You either can transfer money to an e-wallet on the platform, which is run by a third-party payment provider. We as the platform do not hold your funds. Or you can simply transfer your funds via bank to the SPV project wallet. It stays there until the shareholder agreement is agreed. And once someone downloads the agreement, is happy with everything, accepts that, then that is expressing a desire to complete your investment. So I want us to run through that so people are very clear as to that process. And until you've done that, then you cannot invest in this project. It's as simple as that. So for those that do want to invest perhaps on Thursday or whenever they decide to, stressing you have to do your full investor readiness. Just to finish off then, in terms of platform due diligence, it's also important for us to highlight, we as a platform are not recommending this as an investment. We're not financial advisors. We don't give advice on what you should do with your money. We are confirming that we have carried out due diligence on the fundraiser. So we've had a look at both Andy and Tina. They've been asked to supply a whole bunch of documents and just to confirm that, in terms of some of the claims they make about their background in property cannot be substantiated. So that check is done. We also verify the financials. Avina in our team is a financial analyst, and she runs through the numbers, which was particularly fun regarding the MIRR and the various calculations around that. And then we also verify that the SPV is exactly who it's claimed it is, who are the shareholders, etc., etc. So we have carried out that DD, so we can stand over that we have done DD on the project, but we are not giving financial advice. So really, to summarize then, the project, HMO mixed-use conversion, target raise 142,538, minimum raise 100,000, and the project goes forward. You're projected 13.44% MIRR. It's a 6-year project. Minimum investment is £100. I see our question jumping in here. I'll take this in case it's a let's see. There's a technical question there, which we'll answer on the forum or directly. So if someone's just a technical question on the login, which we can deal with. So let me just finish off by saying that actually on Thursday, our normal weekly webinar, which is a webinar that's co-hosted with myself and John Corey of Property Fortress, we will be, again, just doing a little bit of a look at MIRR. And we're going to be joined by, I think it's Andy. I think you're joining us on Thursday just for a brief sort of final update on the information. And that will also allow people to ask any last minute questions. So that's 10 o'clock on Thursday. You can get on our social media to register for that. We'll have an email go out after this webinar to all who attended, and we'll make sure that link is there. And then at 12 o'clock on Thursday, then the project goes live for investment. So any final comments from Andy and Tina? Any last minute wrap up thoughts before we finish?
Just as you really, if you've got any questions for us, pop them on the forum. I'm keeping an eye on it daily, so we'll answer them. Feel free to reach out to us individually as well through our website. Have a look at our website to see what we've done in the past, and yeah, look forward to hopefully working with some of you.
Yeah, thank you all very much for listening, and you know, we're really excited about this as well. There's been stuff on the forum. I assume there'll be an opportunity to ask me any questions on Thursday, and I don't mind being put on the spot, so yeah, feel free to do that as well.
Yeah. Okay, well, I think that wraps us up for our webinar tonight. Thank you everyone who's joined and taken the time. Hope you found it beneficial. These slides can be emailed out to anybody who wants them. The recording will be live by tomorrow morning on our YouTube channel, so you can go back through it again if you want to double check some of the things that Andy and Tina said, and download the offer document, and you can compare. But these webinars are very much designed just to give you an introduction, and then if you want to take it further, get a hold of the offer doc, grab a cup of coffee, read through it, and do your assessment. And again, as we have pointed out numerous times, terms aren't guaranteed, and definitely read all the risk warnings, etc., before you decide to invest if you do. So again, Andy and Tina, thank you very, very much for joining us tonight. Thank you for giving the time to jump on and talk to our potential investors. I think it's been a really good, informative webinar, and Andy, look forward to seeing you on Thursday. So all the best, everyone. Stay safe. Good luck.
Thank you, David. Thanks. Bye-bye.